Governor Kuroda, thank you so much for sitting down with us. I wanted to start by asking you about the Japanese economy, because we've seen a pretty strong growth streak. What happens next? What's your forecast?
You see, in the last 8 quarters, the Japanese economy recorded positive growth in every quarter, and the average growth rate in the last 8 quarters is close to 2%, which is well above Japan's potential growth rate of about 1%. So economy has been improving, corporate sector enjoys historic high level of profit, unemployment rate continues to decline to 2.5%, which is a full employment situation. So real economy is doing quite well. On the other hand, prices, although rising steadily, but still consumer price inflation rate, excluding fresh food, is only about 1%.
Right.
And if you exclude energy items, then inflation rate is only about 0.5%. So there's still a long way to go to achieve the 2% inflation rate. So,
do you have confidence that you're going to get there?
Yeah. But in order to reach 2% inflation target, I think Bank of Japan must continue very strong accommodative monetary policy for some time. It's necessary, but we are confident. It's according to the latest forecast of the policy board, it's around fiscal 2019. So maybe 1 to 2 years time, but this is only forecast. And still board members think that there's downside risk bigger than the upside risk. So risks are skewed toward downside. So anyway, what is necessary for the Bank of Japan is continue our accommodative monetary policy until really economic inflation rate reaches 2%.
You've just started your new term. Congratulations.
Yeah, thank you.
How is this term going to be different than the last?
In the last 5 years, we implemented very accommodative, expansionary monetary policy so that the economy greatly improved. Now the economy is growing close to 2%. Unemployment rate is only 2.5%. The corporate sector enjoys historic high level of profit. So the real economy is doing quite well. But inflation rate, excluding fresh food, is still around 1%. And if you exclude energy items, then inflation rate is only 0.5%. So that means that in the last 5 years, monetary policy was successful in improving the real economy greatly, but inflation rate has not yet reached the 2% target. So in the next 5 years, we will continue our accommodative monetary policy, expansionary monetary policy to reach 2% price stability target or inflation target. And then, of course, we have to start normalization.
Are you thinking about that?
Oh yeah, because we think that it will not take another 5 years to reach 2%. And that means that sometime within the next 5 years, we will reach 2% inflation target, and we start discussing how to gradually normalize the monetary conditions so as to maintain around 2% inflation rate with strong economic growth.
Does it worry you at all that the other major economies in the world are already there? They're already normalizing and moving off of zero interest rates. And you're not there yet.
I think that is quite natural, because the U.S. economy, look at the U.S. economy, growing 2.5 to 3%, and the inflation rate is very close to 2%. So given this very strong, robust economic growth with almost full employment and close to target inflation rate, naturally Federal Reserve has already started normalization. They are now on the process of reducing the expanded balance sheet, and the short-term interest rates were raised already several times.
Right.
On the other hand, look at the European Central Bank. You see, they are still implementing very accommodative monetary policy. They have not yet started normalization process. And then Japan. Economic growth is okay, but the inflation rate is even less than the inflation rate in the European or Eurozone.
So everybody's at different speeds.
That's right, that's right.
Yeah.
Depending on the economic and inflation situation, central banks must implement and adjust their monetary policy.
But broadly, what we're seeing globally is strength.
Yeah.
Synchronized economic recovery, the
right.
best we've seen in years.
Yeah, that's right.
One thing, though, investors are wondering is this the peak? Is this as good as it gets, where everybody's growing together? What do you think?
I think two things. One, there's no predetermined kind of cycle in the economy. And second, this time, we are still in the aftermath of the global financial crisis, started in 2008. So the huge crisis and negative growth, and from that point we have been recovering. So that naturally recovery phase tend to be longer than usual. And at this stage, we don't see any imminent sort of turning point. As you know, IMF recently released World Economic Outlook, in which,
this year and next.
3.9% this year as well next year. So, world economic growth is likely to accelerate and maintain the high rate of growth this year as next year. So, of course, you cannot expect eternal expansion, but for the time being, this year, next year, we don't see any sign of turning point.
But we are seeing some increased volatility in global stock markets.
Yeah.
What do you think is driving that?
As you know, from February this year, the U.S. statistics show that somewhat stronger than expected wage increase and employment increase. Then the long-term interest rate responded quickly, impacting stock market all over the world. But now, after some fluctuation, it's now sort of stabilized around the current level. So I think you are right that you have to continue to monitor carefully financial markets, not just in the United States, but all over the world. So that, for instance, IMF made, this is one of the risks faced by the World Bank, world economy, that is to say, unexpectedly faster pace of monetary tightening could have ramification over global financial markets as well as economies of emerging countries.
There's
so
also
that point should be carefully monitored, but always we have to be careful.
Well, one thing we have to be careful for is not to get into a trade war. And there is increased protectionist rhetoric from many places. How big of a risk is this for Japan and for global growth?
I think at this stage, probably this is the biggest risk faced by the world economy. Of course, as far as the Japanese economy is concerned, at this stage, we are not much affected, but this kind of protectionist or inward-looking economic policies emanating from one country to another retaliation and so on, that would be very dangerous, damaging to the world economy. So we have to be very careful. But on the other hand, I mean, all countries, developed as well as developing, they do understand the great contribution of free trade. So I really don't think the sort of trade war would spread all over the world, and the world trade goes down and the world economy decelerates. I don't think something like that would happen, or I should say, hope never happened.
Well, one question with all of the rising rhetoric is, if something like that were to happen, do central bankers like yourself have the tools to deal with it? Because central banks have been maxed out on their crisis-fighting tools. Of
course, I mean, central banks, again, all over the world, have to take into account global economic outlook, financial market movement, and even the government fiscal policy and structural policy. All factors affecting the economy must be taken into account when the central bank decide its own monetary policy. And so there may be such kind of risks, and then of course we have to respond to maintain price stability, maintain high level of employment.
You have more tools.
Yeah, I think so.
You're using a lot of tools.
Yeah, that's right.
But you have more. When it comes to trade, this week your Prime Minister was visiting President Trump. It looks like they're going to go the route of a bilateral trade agreement instead of joining the TPP. Were you disappointed to hear that?
I'm not directly involved in summit meeting between Japan and the United States, but as far as I know from the Japanese side, I think Japan continue to advocate multilateral solutions and continue to advocate TPP. And at this stage, TPP 11, excluding the US, is agreed, but Japan very much wish US join or rejoin TPP. And I think that is still priority of the Japanese government.
Another risk that the IMF warned about was rising debt levels, sovereign debt levels. And when you look at Japan, it's the highest among all major economies,
That's
236% of GDP. When should investors worry about that?
When government debt GDP ratio surpassed 100%, there was a huge discussion, and the rating agency downgraded Japanese government bond. Now it's over 200%. Rating agencies have already downgraded before. At this stage, of course, debt crisis is not erupting in Japan. First, because 95% of JGBs are held by residents, Japanese individuals, companies, and financial institutions. And secondly, Japan is still by far the largest net foreign asset holder. Because of that, maybe at this stage no debt crisis is erupting. But I am quite sure that debt sustainability or sustainability of the public finance must be squarely restored or maintained once confidence in the government or the country is lost. It's very difficult to restore. So at this stage, no crisis, or instead of crisis, whenever financial market fluctuate, Japanese yen is seen as safe haven currency.
Is that frustrating to you?
I should say that I don't understand why Japanese yen is seen as safe haven currency. But anyway, at this stage, no debt crisis is likely. But the government is determined to reduce first primary deficit, eliminate all primary deficit, and then try to reduce debt to GDP ratio gradually over time.
Is the Japanese yen too strong?
On exchange rate, as a central banker, I should refrain from making any comment. But what I can say is that exchange rate should reflect fundamentals. And since fundamentals move gradually, that means that exchange rate should move gradually, not fluctuate widely.
It is interesting that during periods of volatility and rising fears of trade wars, the money goes into the Japanese yen.
What you call safe haven currency?
Safe haven currency. And then on the other hand, your policy weakens the yen. I wonder if this is a President Trump, that has tweeted before about currency manipulation and devaluation. Do you worry about being on the other side of that tweet?
You see, I don't think Japan is intentionally depreciating the currency. If anything, Japanese yen from time to time appreciate too much. So I don't think Japan is manipulating a currency in order to get export advantage. No, I don't think so.
What is your prediction for what we're going to see as far as the global economy? You sounded very optimistic over the next year.
Yeah, next year, this year, next year, I think like IMF World Bank, IMF World Economic Outlook, I think the world economy will continue to grow at a relatively high pace. But as I said, there are a number of potential risks. One of them is, of course, protectionism. Another is unexpectedly rapid tightening of monetary conditions in some countries, and various geopolitical risks in North Korea or in the Middle East. So there are several downside risks faced by the world economy, but I hope none of them realize affecting the world economy in the next 2 years.
Finally, you mentioned North Korea. Is an escalation there a big threat in your view?
I think, I mean, again, geopolitical risks are completely outside of the territory of the central bank. But I really hope that North Korean risk be contained and reduced in coming months and years.
Thank you so much, Governor Kuroda. It was a pleasure.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.